Hello again, everyone. It's another Federal Tax Update podcast. It's Annie Schwab and Roger Harris back with you. And Annie, how you doing today?
I'm doing pretty good. I will say I would be better if I was in my hometown today. It is Mardi Gras. It is Fat
Fat
Tuesday.
Tuesday,
I'm from New Orleans, but today I'm sitting in my office in Dallas. So
doing a
it is what
podcast.
it is.
Yeah. So, what would be different if you were back in New Orleans? I mean, for those of us who have never been to Fat Tuesday in New Orleans, what are we missing, and what are you giving up to do
Oh,
this podcast?
yeah. Well, the best part is hanging out with your friends and family on the street, eating some, it's either Popeyes or crawfish, one of the two. But it's just spending the day outside watching some of these floats are just extravagant. I mean, people spend so much money and so much time. It's always great to see. And then the music in between all the floats, they have bands from different schools. So the kids want to catch the throws. The adults are kind of admiring the floats and all the costumes and decorations and those kinds of things. And then you can never go wrong with the food. So
Yeah.
um,
Is this king
today's the
cake?
last day to get a king cake
I
if
was
you
going to say,
haven't
is
gotten
this
a
a
king
king cake?
cake.
All right. Yeah. Yeah. No,
Today's the day.
we used to get some around here. We don't have any anymore. So,
Yeah, the grocery stores don't do it justice either, to be honest.
yeah, I'm sure they're better from New Orleans.
Yeah.
Okay, well, so why are we here today other than to talk about Mardi Gras? Um, we're going to talk about some topics that we've talked about through earlier podcasts, but now we're into a tax season. We're beginning to get some feedback from our offices and other uh, people we talk to about how the filing season going, what kind of issues are coming up, maybe some tricks or something to help you navigate, because this is new, not just for us in the practitioner community, but it's good for our new for our clients. And so, we're just going to kind of revisit a lot of topics. We're going to talk about some things that we probably haven't talked about, but we want to talk about it in light of what we're doing. Now, it's anecdotal. It's still early in the tax season. We haven't, we may have completely different opinion, a completely different idea, a month from
Yeah.
now, but at least based on what we're seeing now, we thought we'd revisit some of the things that we've talked to you about and kind of give you a little more current event take on it. So, Annie, why don't you kick us off and get us started?
Yeah, so tax season started essentially opened on the 26th of January. We're, February 17th here. I know returns are being filed. There are some of those returns who, with the child tax credit or earned income credit, something like that, may be kind of holding up. I know there are still some forms that are pending.
All right.
But for the most part, what we've seen, at least through our offices, is that returns are going out. Refunds are being issued most within 2 to 3 weeks. We had a crazy anomaly. One of our colleagues at the office actually got her refund. Was it 5 days or
5 days.
4 days?
Yeah, 5 days
Yeah.
after electronically filing, they had their refund. I've never heard of that even in previous
Yeah.
years. That's
Yeah.
amazing.
Yeah. So I mean, it seems to be going relatively smoothly. I know, some of the delayed forms, some of the states are not quite ready to kind of process returns. But it's still really early in the season. I mean, sitting here in mid-February. I haven't heard any reports of these horrible breakdown in communication or those kinds of things. I'm sure the wait times on hold are still lengthy, but that's to be expected during tax season, in my opinion.
Yeah, there's still some hit and miss. If you listen to our podcast that we did prior to this one with Jennifer McMillan, the NAEA had done some initial polling, and they had some concerns of what they were seeing. Um, a lot of it, I think, more or less had to do with the phones and the people
Hmm.
answering. I mean, we've had a situation here where the person answering the phone clearly didn't understand, wasn't trained as well as we would like them to be. And I just think those, we've been saying all along heading into this tax season, we're all going to have to be patient. We're all going to have to expect things not to be as functional or as smooth as we would like it, given that the IRS has a lot of new people, a lot of lost a lot of good people,
Yeah.
and so. But so far, I mean, like I said, it's just February the 17th, so we got a long way to
Fingers
go.
crossed,
But
right?
yeah, so far, it could be worse.
Absolutely. Well, I will say, given the new tax legislation, so tip and overtime tax deductions for 2025, that is where we're getting a lot of questions, not only from our office owners, but their clients are reaching out. We're seeing some, this year's challenging, right? 2025 is challenging.
Right,
The law passed; it went retroactive to 20 to January of 2025. The employers are actually not required. They've got a get out of jail free card. So they're not required for 2025 to actually separately report tips or qualified overtime.
right,
And the IRS has, some safe harbor guidance, which makes it difficult for us to determine, okay, well, what are the qualified tips and overtime pay? Like, would if you're not required to separately state it and give me the number, but the client saying, oh, I had qualified tips or I had overtime pay, us as practitioners are sort of standing here like, give me something. Like, yeah, you gotta let me have something to know how to put a number on the tax return. So I think that probably will be the most challenging part of the actual tax preparation. I mean, there's just lots of new things. I mean, there's other new things, but I feel like this one is something that's just not as cut and dry, at least for 2025.
yeah, I think overtime is gonna be particularly challenging. And tips, at least the guidance we have and the fact that there was some tip reporting historically that
Before,
we can
yeah.
fall off rely on. So I
Hmm.
think a lot of it's gonna be, and we'll talk a little bit about it, what's our role? What can we do? What do we do if a client brings it up? Should we bring it up if a client doesn't? Those sorts of things. I think overtime is gonna be the one that maybe haunts us the most, but who
Hmm.
knows? You know?
For sure. And as the other challenging part with this is, we're sitting here in February of 26, and I personally have not seen a lot of guidance come out, because technically starting in January of this year, that you will be required to track the eligible overtime and tips and then be ready for the mandatory reporting at the end of 26. So there's going to be some communication with, whoever's doing the books. How are you coding this? Who's running the payroll? What kind of daily logs or templates or, spreadsheets or apps or whatever method. Now, restaurants probably already have something in place, but, there could be lots of industries that are not familiar with the daily tracking, because the tip report, you're supposed to report tips, any tips over $20, if you make more than $20 in tips, by the 10th of every month prior. So like January's tips, if you made more than 20 bucks, need to be reported by February 10th. And that's not new. That
Right.
has always been the case, but for, you know, clients who are not used to that rule, probably aren't tracking it or doing that reporting. So I think sooner the better that you can talk to your clients about what's going to be needed in order to get the mandatory reporting of tips and overtime correct for 2026. Let's not wait till June to start dealing with it. But I haven't seen a lot come out recently on the 2026 kind of tips and tricks and what they'll take and how they're gonna, do the treatment.
And it may be that you're gonna have to reach out to whoever is your provider of payroll services. I mean, if it's ADP, Paychex, Gusto, an Intuit product, somebody else. I mean, they may all have different ways that they want you to do something so that they can capture the information that will be on the W-2 next year. So, hopefully the payroll providers have reached out to you and at least told you from their perspective how they need you to input certain data that they need to then capture and make sure they can reproduce it on the W-2 at the end of the year. So, and they may all have slightly different ways. They're
I did. I researched, I looked at ADP, Gusto, and ACS, and they all have a recommended method for, coding things, codes to distinguish between regular wages and overtime premium, or double overtime or whatever you have, but it's all a little slightly different. So you're right. I mean, that's the best thing is, if you are using a third party, find out, get trained up on what you need to do in order to get it correct, so that we're not redoing stuff or chasing the problem towards the end of the year.
And if you're dealing with some small firm that's some people, make sure they understand the rules. You mentioned
Mhm.
overtime premium. That's the real number we need to know about, not just, how much overtime did they receive, because not all of
Mhm.
that qualifies.
Yes, right.
So, it's gonna be incumbent that the payroll provider that your clients are using know the rules, and that they know what to capture and how to capture it and how to report it, not just, "Well, I just have to capture all the overtime that's out there." And I mean, again, I'm confident most of the big national
Yeah,
companies
I
will
think
know
so too.
that, but if you're using Polly's payroll service, I don't know if,
Yeah.
you know, are they fully up to speed in what overtime. Again, I
And
keep
there's
thinking
probably
tips. Tips is pretty straightforward if you know the right industry and things
Mhm.
like that, and where service charges fit in. And the one thing we are seeing, and I don't know if this is the right time, I'm going ahead and mention it, is something new called a non-tip fee is showing up, and I've seen that, read about that. I've never seen it personally, but I've read about it where uh, restaurants are putting a no tip fee, that if you don't tip, this fee gets automatically added. Now, I think it's pretty clear that wouldn't qualify as a tip, but as a
Right.
consumer, um, check
Check
for
your
that.
bill.
Yeah,
Look at your
because
bill closely.
I saw one instance where the no tip fee was added and the person caught it, and in the tip box put a negative because they didn't want to tip for whatever reason.
For whatever
I
right.
don't know why, but they didn't want to leave a tip. So when that fee showed up, they went into the tip line and put a negative to offset it. So, uh,
Interesting.
it's always
I'll have to
something
be
new.
more careful. I
Yeah,
know.
don't just whip your credit card, tap it, and move on,
Move
and
on.
pay
Yeah.
attention when you're tipping to see what else is there. There may be all kind of little fees hidden that are called something else. Again, most likely those fees can't speak across the board, but they're not voluntary, so I don't think they'll qualify for any of
Mhm.
the tip benefits that we're talking about.
Yeah, I agree. It's gonna be a little tricky to kinda navigate through that, but I think 2025, we're just kinda rolling the dice,
Just
doing the
doing the
best that
best
we
we can.
can.
Yeah,
2026, hopefully, we'll have some structure, so it'll be a lot easier, to to determine what's accurate and who's responsible for handling those things.
right,
Is it
right.
the employer? Is it the waitress? Is it the tax preparer? Who's got the burden? So, um, for this year, I guess here we are.
Yeah, here we are, and we're gonna I mean, this is a podcast, obviously, but it's also something you can see on YouTube. And Annie's gonna show some slides here that obviously, if you're listening to us while you're
Driving, don't
jogging,
do that.
driving, or running, you're not gonna be able to see it anyhow. So we'll try to explain it and make sure you understand it. But again, if you really want to see the handouts, because some of these are things we've seen,
Mhm.
and some suggestions on maybe what you should look for, you can go uh, look at the podcast on YouTube and actually see the slides. So kind of a little prep. Don't be shocked if you hear us referring to something, and obviously if you're listening to it, you can't see it. Well, describe, I guess, Annie, what's on the screen for those that are in their car.
Right, so I have a W-2 here. There's nothing, in the tip box, but however, in box 14, there are 2 codes. One says qualified overtime for 400 bucks, and the other one says qualified tips for 100 bucks. And so what are we supposed to do with that? A client brings this to you. They say, "Yeah, I mean, I had a little bit of tips. Yeah, I had a little bit of overtime, but we've got these 2 numbers here, and we're not sure exactly how those numbers were calculated." We would look at box 7, obviously, for the tips. But if that tip number in box 7 doesn't match $100, which is in box 14, why is it different?
All
Are
right.
these in addition to? Are these, how big are the discrepancies? So again, you're going to have to question, perhaps ask for a pay stub, to try to figure out if can I just go with this? Do I just put these numbers I can just run with? And maybe they are, and maybe a simple conversation with the client would make this more clear. But, given just these 2, qualified overtime and qualified tips, it's not cut and dry.
Yeah. I mean, and these are things that we've seen. Now, again, tips, first thing you can do is what kind of business is it? Is it
Mhm,
even a qualifying business where the tips matter? Uh, you got to question why it's here, but not in the tip box on the W 2 if it's
mhm.
a real tip. We're going to find a lot of things that we have to go back to the employer and talk about, this
Yeah.
year because of that. We'll get to the overtime in a second, but I guess if that was presented to me, the first thing I'd do is I'd see what kind of business it is. If it's, say, let's
Mhm.
just make it obvious, it's a hairdresser, so tips are likely.
Yeah.
I'd still wanna know, is that all you got? Why isn't there anything in the tip box on the W-2? Because that's the place we can put reliance on according to
Yeah.
the
We
guidance that
did
we
get
have.
guidance from the IRS that it's okay to rely on box 7.
So what does this represent? Does this tips, I mean, I'm assuming these are tips that came through the employer and went back out to the employee, and yet it's not in box 7. I don't know if that's gonna cause any matching issues down the road, but if it's a
Yeah.
hairdresser or a restaurant where the business is qualifying, Annie, I guess I'd go with it, but, I'm still not
Yeah, I'd
comfortable.
ask some questions and maybe document, but, without anything to say that this is incorrect, I'd go with it too.
Yeah. Now, the overtime's a different animal because, um, there's no other place on the W-2 it's supposed to be.
Right.
So, I think, I guess the first question, let me step back before we address this, because here's the first question I'm dealing with. So, if every taxpayer comes to you and they don't bring up overtime, should we ask them, do they have overtime?
I do, I think so. It's part of our organizer, so our questionnaire that we send out to our clients, and I think it begs the question to open the discussion, especially if, there's a client that is in, an industry that's overtime is common. I would ask.
Okay, so we're gonna ask every client that comes in. For some, this may be the first time they've ever heard about it,
Yeah,
for others,
who knows?
because there's gonna be, I think clients gonna come in and either ask about it because they say they have it, or they're gonna not even mention it, and then we bring it up. And again, this is where if there's nothing there, the client says, "Well, yeah, I think I worked overtime," then we gotta send them back to the employer, in my opinion, for some addition, even if this number's
Something.
here, this would be true, I think, in some instances, even if they put this number like you're showing on this W-2, that someone just saying, "Yes, I worked overtime, and here's a number." Are we comfortable that that's as far as we need to go?
I think I would ask for at least, do you get paid time and a half? How often do you work overtime? This says $400 of overtime, so that can't be that much, that many
Right.
hours. I think I would just do a smell test for reasonableness, like, oh, what are your normal hours? And how often do you work overtime? And is this time and a half? And what's your, hourly rate? And kind of just give it a little smell test.
Yeah, because remember, it's gotta be overtime consistent with the Fair Labor Standards Act.
Of
So the
course.
first so you should at least ask, is this based on more than a 40-hour work week? Is this based
Mm,
on time and a half? That it's not some other number based on an overtime calculation in that business that doesn't
match
piggyback
fair labor
off the Fair Labor Standards Act. So I think you have to ask some basic questions. And I think something Annie just said is important. You can almost do a quick math test to kind of see if it just seems reasonable. Like, okay, so y- what's your hourly rate? Let's keep it simple and say you work in the same place all year. You don't have 27 jobs, which would make it really
Yeah.
tough. But let's
Yeah.
assume you work in the same restaurant and they tell you I'm making $20 an hour. So $40 a hour, 40 hours a week at $20 is 800. Whatever 800 times 52 is what, I would be looking at as a base
Ballpark.
number.
Yeah.
And then do they have more or less than that on their W-2? If they have less than that, then I gotta ask more questions because that
Yeah.
doesn't make sense if you worked there and got paid for 52 weeks. If you had, more than that, then that might tell me that there's some overtime. But again, that would theoretically be the entire amount, not the
Not the premium.
premium amount. So, you can do some math test if you have a simple case of one employer
Mhm.
for the whole year and a steady hourly rate. I mean, if their hourly rate changes during the year and, they've got multiple employers, that's not gonna be, but I think we're gonna have to ask some questions. So, um, I guess the first thing I would do would ask that, I'm speaking for me here, Annie, then you speak for yourself. If I saw this W-2 with $400 of overtime on it, I would at least ask them to go back to their employer and acknowledge that they got paid overtime. I don't expect the employer to know the amount. Well, they came up with 400, so at least I might ask them in this case.
Yeah.
Well, acknowledge that this person did receive overtime, and how did you calculate that it was $400?
Yeah.
And see what they can bring me, because I think that would help me. And then if they don't, and the employer says, "I gave you the W-2, that's all you're getting," then we're
I'd
back
go
to a
with
gut
it.
feel.
Yeah, I think I'd go with it.
Yeah.
So, all right, next one. I'm gonna move my screen here. Hopefully, you guys will be able to see it. So we've got another W-2 here in box 14. This time, the W-2 says OT premium. So the first one we talked about said qualified overtime. This one says OT premium. And in that case, you're looking at a different terminology, same
Mhm.
box. And if you look at, so basically, this is like a client comes to you and they say, "Hey, am I getting back the full $2,000 that's listed here as overtime premium, or am I getting a portion? My full overtime pay for the year was 6,900." So the client has some detail. The client's saying, my full overtime pay was $6,900. Am I going to get back my $2,300 noted here in box 14? And this one is pretty easy to kind of figure out. Basically, what if you got $6,900 as overtime and they say it's time and a half? If you divide that number by 3, you get $2,300, and the W-2 here says 2304.26. I mean, that's pretty close.
Right.
I think I would personally go with this one. I also think the term premium, that's the term that's used in the Fair Labor Standard Act, and I feel like if you're coding something as a premium, it seems pretty legit that they know what they're doing. Again, quick test over. Oh, you got 6,900. Here's the premium. Divide by 3. Reasonable to me. I don't know. Would you ask more questions, Roger?
I'll make sure I document when they give me these answers. This is why the organizer is important, and hopefully that your organizer helped you capture the numbers that you just gave us, that
Yeah.
the full overtime was 6,900, the premium amount was this. Again, this is coming from the employer, so it's not the client self-interest being served here, or the
Yeah.
taxpayer. And again, if it's a large company that has the wherewithal to understand all this. Again, I hate to say this, but some mom and pops putting information out, I might question a little bit more. But again, I think the key thing is that the organizer or something documents that you asked these questions, you came up with these numbers. I think they're going to be lenient on us as well as the
Mm.
taxpayers, as long as we've made some reasonable attempt to do this. I mean, if the total overtime was 3,000 and the premium was 2,600 or whatever, then I might, you know, have a pause. But this seems to pass the smell test. So I'd go with it, but I'd like to have these, everything
Something
in my
documented.
file, so I can say this is what I did to prove that this was reasonable. Because I think reasonability is as far as we can go this year. Proving something down to the absolute T, absent of something coming from an employer that showed everything, is going to be impossible.
Okay, we've got another one here. Again, box 12. This time the description says OBBB overtime. So OBBB OT. And it's like $800, right? Um, we see the wages, total wages of like 21,000, but this is really all the detail that we have. Um, on this one, I would definitely ask some questions. I know the overtime is like, I don't know, less than 3% of the total wages. I mean, it's not a huge number, but perhaps like a pay stub or something where you can determine, is that the full amount? Is that the premium? Kind of how did they come up with that number?
Yeah, and maybe the employer, needs to chip in here. Again, I think anytime the employer has put some number on a W-2, they
Hmm.
should have some sort of backup
Something.
information that, they could share with us to help us know, what this number represents. Because I think
Mm.
this tells me the employer's trying to do it
Yeah,
the right
exactly.
way. Whether they have the right understanding or not, it's a different story. So again, I think we're going to be sending our clients, our taxpayers, back to the employer a lot, this year. And that's just an unfortunate reality given that we have retroactive and no reporting. So, yeah, I mean, I feel pretty good anytime it comes from an employer on a document like a W-2 or some separate document, whatever it is. But I still might want to ask some questions because we're relying on the knowledge of the employer and their payroll provider to make this the right
Mhm.
number or the right number under the law. I'm sure that number is backed up somewhere, but I don't know if they know what they're doing. Maybe the big risk is that they put all overtime on the
Yep.
W-2, the full amount,
Mhm.
without understanding that because the way it says no tax on overtime is a little bit misleading if that's all you know. First of all, there is tax, there's payroll taxes on it, number one, so it's not no tax. And secondly, it's not on all the overtime, it's on the premium overtime.
Exactly. That term, that portion, is what you're looking for.
Yeah. So
A couple more here. We've got this is just an earnings statement, so it's for the last pay period of December. And so I'm looking at an earnings statement where it indicates that the regular rate is $30, so you get paid $30 an hour. Your PTO rate is also $30. That doesn't really come into play here. And it says your overtime rate is $45. So looking at that, I would agree. Your overtime is time and a half. The 30 plus the 15 is the 45. And we see some calculations here basically indicating that they're calculating the overtime for the period. So the premium is the $15 and it says they have overtime of 3 hours. So my calculation would be the 15 times 3, which is $45 of qualified overtime premium. So it's not all 45 times 3 hours of overtime. That's the total overtime. But it's the difference between the regular rate at $30 and the overtime rate at 45. The difference is 15 times the 3 hours gives you 45. Would you agree?
yeah, and I think what I would hope is that when they get their December pay stub, that we have these year-to-date numbers. Now,
I
we're
know,
not
that would
gonna
be
have
so
all
lovely.
we're not gonna have all the hours and everything, but I think in this instance, if I saw an individual pay stub that looked like this, and then
Mhm.
I saw some year-to-date numbers where at least it told me the total amount of overtime, I think this would be a place where I'd be comfortable with the dividing it, you know,
By
the
3
example
and
they gave us, the dividing it
yeah,
by 3,
I
because 'cause I've
agree.
seen an individual pay stub that gives me the impression they know what they're doing it the right way, they're it's Fair Labor Standards Act, and then I could take that total overtime number on my year to date, my December 31st pay stub, and I feel pretty good about that.
I'd go with it. Yeah,
This is
me too.
probably the best we could get in a year with no requirements to do anything because
Mhm.
they're showing us what they're doing on a now I'd hate to have to add up 52 of those, but,
Well, hopefully you've got a year-to-date running total and they've been
yeah.
treating it the same way throughout the entire year and so that you could go with it, yeah.
Yeah, because remember, if they can only bring you weekly pay stubs and you got 52 of them, that somebody's gonna have to pay for that time to go accumulate
Calculate.
those 52,
Yeah.
and I would probably tell the client, "My hourly rate's a lot higher than yours, so if you want me to do it, you know,
Yeah, right.
I'm happy to do it, but you're paying my rates. If you go home and you do it and bring me the totals, then I might save you some money." But, hopefully they'll have a year to date.
Yep. Here's another example. Again, it's a pay stub for December, the last month of December, and we've got clearly provided the regular pay rate of $22. So if we have that as the pay rate, what we would have is half, time and a half would be 33. 22 divided by 2, a time and a half, da, 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 you get 33 hours. And here they're calculating the 33 hours, sorry, $33 as the amount that is the total overtime. So if the regular rate was 22, the overtime rate is 33, the difference is $11. So that's your premium times the hours of overtime, which gets you close to like 600 bucks. So that would be my calculation, which is not what is shown on the stub because it's taking the full 33 times the hours.
Right.
So I would think you would have to back into the qualified overtime premium.
Right. And that's why I said overtime is going to be more challenging, I think, than tips, because what some people call overtime versus premium overtime versus qualifying overtime versus that's where we're going to have to be careful to try to understand the terminology that someone's using. What does that number represent? And see if we take the number on the W-2 at face value, or if we have to do some digging to figure out how much of that number would qualify. And again, that's just the problems that happen when you make things retroactive, and it required record keeping that no one knew they had to do for part of the year, and no one really switched, midstream to my knowledge. Well, maybe some did, but for the most part, if you didn't have it for the first 6 months, it didn't do you a heck of a lot of good to change your systems to track it for the last 6, because you still were stuck with the first part of the year. So it's just one of those unfavorable and unforgettable consequences of retroactive tax law. It's great for the politicians. It's lousy for taxpayers and tax practitioners.
Yeah, exactly. All right, let's do one more and then we'll move on to something else. This one's kind of interesting. Again, a W-2 we've got in box 14. What it says is 1.5 times overtime, and underneath it, and it gives you a number of like $20,000. And then underneath it, it says 2 times overtime, and it gives you like a $300 number. So here they're saying, obviously, they're calculating time and a half, and then they're calculating double overtime. We've got 2 different figures here. Total wages are around 60,000, and it's saying that time and a half was 20,000. To me, that's a big chunk. So I would probably ask for a little bit more detail, talk about, this time and a half of, 20 grand. I would divide that number by 3, assuming it's time and a half, and go with the third of it. That would be my hunch. I think 20,000 compared to 60,000 is too big. It says time and a half.
Mhm.
I would take that number and calculate the premium by dividing by 3.
Yeah, I think that in this instance, that's kind of what makes sense. I think there may be some where you really can't tell,
Yeah.
and so the question is, what do we do when there's, again, we don't not going to get any more information than what we have. The number that we're given is reasonable, but it's not distinguishable as to what it is. And so you're sitting there with your client, and you know that if you take a third of it, everybody's safe, but the client wants to take it all because they
Yeah.
say it represents the premium. What do we do in that instance? I think that's going to be and I think that's going to happen to us at some time this
Mhm.
year, that they're going to say, no, no, I know that's the premium amount. And again, the W-2 in and of itself says that's possible. Doesn't tell you that it is, but it tells you it's possible that the wages and the hourlies work out. I think, the question there is, do we protect ourselves and say, I'm only going to take a third of it because I think that's better for me? Or are we going to give the client what they want and take it all? And if so, how do we document that? I think that's going to be a challenge. And again, I'll speak for me, and then you speak. First of all, it's the client's tax return. They're
Yeah.
they're taking a bigger risk than we are. If I can reasonably believe what the client says, and the client understands the ramifications if they're wrong,
That's the point. Yep.
and they will document the fact that they are representing this is correct, and it's, again, it passes a reasonable smell test. Again,
Mhm.
then I'd probably take it if the client, felt that strongly about it. But
Yeah.
but again, everybody, you all have to make your own call on that one. That's how I do it. And you say what you would do.
Yeah, no, I would divide by 3. They would have to show me that a third of their total wages was qualified overtime premium, and I'm not sure that would pass a smell test unless they had additional documentation. But I whatever, we both agree. What I would like to talk about real quick is the 2-time overtime.
Yeah,
So, Fair Labor Standards Act does not allow for double overtime pay to qualify as the premium. The point 0.5 is, but the part that gets you from 1.5 time and a half to 2 times is not.
right.
So that's going to take a little bit of calculating to determine what portion of what they're saying of 2 times overtime. So let's say $300 is their double overtime. You would need to back into what the premium
Amount.
time and a half would be.
Yeah.
So a little bit of work for this
Yeah.
one for sure.
One other scenario I think we could possibly face this year, and we'll talk about what we would do in that situation. Someone comes to us and says, I get paid $1,000 a week and I work 60 hours a week. I want to claim overtime. Now, salaries under the Fair Labor Standards Act addresses who can be paid a salary. Because most people historically before now tried to pay people salaries to get out of paying them overtime. That they wanted to base their weekly salary, and there's certain responsibilities of managing of people and things like that. Well, now the tables have turned. Those people who got salaries now wish they were paid hourly and got the same amount of money so they could deduct some of that. But again, if they qualify as a salaried person under the Fair Labor Standards Act, then there is no overtime.
Correct.
It's there
That
for the
hasn't changed. That's been
that's
the
still
case.
there. So
Yeah.
just because somebody wants to claim overtime and they're paid a salary and they work more than 40 hours, I can agree with all those statements. Yes, you work more than 40 hours. So you're working, quote, overtime in the sense of a 40-hour work week, but you qualify as a salaried person, and therefore it's perfectly legal for them to pay you a salary. And at least as of today, based on we've seen no guidance that says you can impute overtime into a salaried person's paycheck and deduct it. So, but I expect somebody's going to come in and want to do that because I don't doubt they work 60 hours a week.
Absolutely.
But
yeah, it's not that. It's that your profession doesn't qualify for that calculation.
right. So, whatever you're doing, you or you got to admit that you cheated the system for all the years up to now that you really didn't qualify as being a salaried employee, and your
Yeah,
employer is
that's
probably
I won't be surprised by that either.
no, because then they probably do owe you more because I can tell you what the wage and hour people would do in that instance. They would assume that $1,000 a week is your 40-hour a week salary, and you're going to be the employer's going to owe you some more money, and then you're probably
Yeah.
you might get some more money, but you're probably going to lose your job.
Yeah, it's not gonna go well for you.
No, it's not going to end well.
No. Well, I do hope, I know we usually don't screen share and all that. I do hope that was helpful to kind of walk through some examples and hear sort of how we would handle it, questions we would ask. Hopefully, you're having some cut and dry scenarios, but if you get a weird one, come back and listen to the podcast, view the screenshots, and if you agree with Roger and I, hopefully we helped you out.
Yeah. And again, I think you can tell from this podcast, we're not saying that there's a right or wrong answer. Every situation is going to carry a slightly different set of facts. There's going to be potentially the ability to get more information in some cases, not in others. There's just a lot of factors that are going to come into play this year, and we're going to have to deal with it. And I think we have to make sure we can show that we did a good job of trying to comply with the rules and the law. And I think if we do that, the service, though they haven't said it to us, they've said it to employers and they've said it to employees, they're going to be lenient. I think they'll follow those same guidelines with us,
I
and we'll
think
be
so too.
lenient. But we have to show that we made an attempt to apply the law properly and not just take on face value any number
Yeah.
that somebody throws at us.
There's some due diligence requirements in my opinion.
And how much you have to do and what you have to do will be different. And again,
Just
remember when
document.
you're calculating your fees, you didn't ask for this. This is something that, Congress passed, the president signed. It will ultimately help the taxpayers if they able to not pay tax on some of their income, but that doesn't mean we have to do all this for free. So your fees should reflect the time that you have to spend to calculate or verify or make yourself comfortable, and the client should know that. They're still gonna get a whole lot more if
Yeah.
they won't if you give them the answer they don't like, but that's too bad.
Yeah.
So just remember your fees this year have to reflect more than because a lot of you probably charge by form, so this is just something that goes on a form. But if you had to spend 5 hours to figure out what to put on that form, that per form charge probably isn't going to reflect that.
Yeah, for sure. All right. Well, we do have some time left, and I'd love to switch gears. Something that we haven't really dove into yet and on our podcast, and that has to do with meals and entertainment. And the reason I'm bringing it up now, even though we're in tax season, is because there have been significant changes on what's no longer deductible, or 50% deductible, or 100% deductible as it relates to meals starting in 2026.
Right.
So while it doesn't affect the current tax season returns where everybody's working on, it does impact, again, educating the clients on how to code certain things, educating your staff on how to treat certain types of meals. So I'm going to go through a couple of examples, and then hopefully this will at least shed some light on what's different, what's changed, and then how to treat them.
And
So,
some
like
of
I
these are
said,
going to affect you. I bet you right now, when some of these are made clear to you, you're doing them in your office
oh,
today.
for sure. Oh,
Yeah.
for sure.
So
Yeah. So
this didn't get
again,
a
this
lot of
is
publicity, but it's kind of
I know, I'm
shocking.
actually surprised that we haven't had a more pushback on this. Um, so again, not related to 2025 tax return. This is 2026, starting in 2026. There are these previously were 50% deduction, and now they're no deduction. So, expenses for the operation of an employer operated eating facility for which the value of the meals provided to the employees is excluded from their income. That one I can kind of get on board with.
Yeah, that would make sense.
Expenses for food and beverages associated with an employer operated eating facility, kind of similar to the third. Expenses for meals that are furnished on an employer's business premise for the convenience of the employer and are excluded from the employee's gross income. That one to me is, I mean, it's the whole on the premise for the convenience of the employer. So again, take that one with a grain of salt, in my opinion.
Yeah, because I'm sure a lot of you were doing that during tax season. You're bringing in lunch or dinner for your employees while they work
Yeah,
long
yeah,
hours. Uh,
exactly. Okay, so then let's jump to the 50% deductible. Some of these are, no changes, but business meals with employees, clients, customers, or business associates. You got to document it, purpose of the meal, those kinds of things. Meals while traveling away from home on business, again, using kind of those per diem rates, or some sort of calculation of, meals away from home. Meals at business meetings, but not the on-site cafeteria. So if you go rent space or something and bring in business meals, meals at entertainment events, you'd have to be able to break out the difference between, all of the charges for this entertainment event, what portion is actually related to meals. So again, those I think are very common. Um, I wouldn't. I think that's probably more self-explanatory.
yeah,
And then our 100% here, meals treated as employee compensation, or as income to non-employees, meals provided at recreational, social events. So that still remains at 100%. Meals provided to the general public, and then meals sold to customers or provided by restaurant employees. So let's look at a couple of like scenarios here, and we can kind of walk through them, Roger. I think it's
yeah,
easier when you look at something in a specific
right,
scenario. So dinner for employees while working late out at the office. Um, that's a 0.
right. No
That used to
deduction.
be a 50, that's a 0 now.
You can pay for it, but you can't deduct it.
Right.
Yeah,
Lunch ordered in for staff during a meeting or training, again, that one used to be 50, now it's zip, it's 0. Meals treated as employee compensation, that one's still at 100%. Here's a good one, airport meal during a trip to meet a client. 50%.
yep,
That's coffee and snacks in the break room for employees. This one I know, especially account, do you throw all kinds of snacks and drinks and coffee and stuff in the cabinet so employees, if they get a little hungry, they can grab a snack. That is at 0% now. So that's probably one that most of the listeners are doing.
Yeah, and that's the one that kinda what are we
Mhm.
trying to get here? I mean,
Yeah, I
so
know.
most of us have coffee in our break room that the
Yeah.
company provides, and we don't charge the employee to come in there and make a cup of coffee. Um, I guess and this the I'm not saying we know the answer to this, but let's say every time you come in the break room, make a cup of coffee, you gotta leave 50 cents.
Yeah.
First of all, who's gonna police it and who do you do all
Right,
that?
right, right.
Would that make it deductible because the employee is paying for it? Or do we have to say, "Well, what's a cup of coffee worth?" Well,
And put it into employee compensation, right.
yeah, and if I go to, Starbucks and pay $7 for a cup of coffee versus, does that mean they're gonna cut off my coffee in my hotel room? Or, I'm just trying to understand. I know this has probably raised some money to help pay for something else, but I mean, come on. I mean,
Yeah.
uh, I think generally speaking, what most of us are supposed to do now is if we provide coffee in the break room and we pay it to standard coffee service, then that's not a deductible expense.
Right.
We can still do it, but we just can't
Yeah. I
deduct
mean,
it.
how would you apply that to, filling your water bottle? I mean,
Yeah. I mean, the
you
whole thing just no, snacks are a different story. I don't know how many. I mean, I know here we provide coffee for our folks. We don't have
Mhm.
food. Well, we only have food if somebody sends it to us.
Yeah.
Like if somebody sent us going back to Mardi Gras, if somebody sent us a king cake today, we just stick it in the conference room and let people have at it. But I don't know that I'd worry about. I don't
Yeah.
know. First of all, we don't have a deduction to claim. Somebody gave it to us, but the coffee that we provide for most of our staff now, technically, we should not deduct. And I'm assuming that means the coffee, the cups,
Creamers,
the
this all
creamer,
the things.
the stir sticks, everything, is not deductible. But then what happens, like we do when we have guests visiting us and we're trying to get them to join our company and we provide them with coffee, does that put it in a different category? And well, nobody's going to track that. How many
No,
cups
no.
of coffee did the guest drink
Percent
versus
have
the
yeah.
staff? I mean, but again, I'm questioning. This is one of those things. It's like, really? I mean, why did you go here?
Make it so much
How
yeah,
much
make
money
it
are you gonna raise off of taxing the coffee in the break room for companies? It just
yeah.
there should have been a de minimis amount at least that you could
Actually, that would have been a great idea.
yeah, if you spend more than $100 a week, then it's non-deductible. I mean,
Yeah.
something, but I don't know. This is the kind of stuff that irritates me that somebody sat in the back room and they were trying to get something else in the bill and said, "Well, we need to raise some money." And somebody said, "Well, if you tax coffee in break rooms, you can build a nuclear plant or something." I don't know.
Right, right.
And so we got it.
Well, I mean, if the big takeaway, and I'll go through 2 more because these are also very common. Go to a restaurant with a prospective client, that's still 50%. If you catered dinner for, like, your employee holiday party, that's still 100%. So not everything has changed, but I think the real takeaway on this is, okay, for 2026, we need to talk to our clients about educating them on the different types of deductibility of meals. I don't know if that's a client letter or you record a short video or you send an email. Maybe do something like a decision tree, like if you fall into this category, this is where it goes. I do suggest having a chart of accounts where it's 50%, 100% deductible or non-deductible. Start training them to code those things properly in your chart of accounts so you're not fishing through receipts at year end trying to figure out, well, where is this supposed to go. I think it's the takeaway is better documentation and communicate it earlier in the year. The same thing with tips and overtime. Treatment's going to be different in 2026. We're in 2026. Let's not wait until the end of the year and we're trying to figure out what happened and where did all this where did this land in your balance sheet or your income statement, and really get ahead of it before you get too deep in the year.
Yeah, because I think most of us probably for years we had that one I don't know if it was 1 year, post-COVID when they were trying to encourage people to go to restaurants and they
Go to
gave you 100
restaurants,
percent they
yeah.
gave you 100% deduction. But for
Hmm.
the most part, we've just piled everything into a meal and entertainment and took half of it and moved
Yep.
on. So,
Yep.
now literally we're gonna have to track the coffee different than the taking a client out and things like that. So it's gonna be a little more record keeping, a little more things there. or you just make the decision, it's not enough, I ain't claiming any of it.
And you
If I
just
just keep
yeah,
one
and you just
account, it all goes in meals and
mhm,
entertainment, none of it's
mhm.
deductible.
Yeah.
And, again, client has to decide the benefit of the deduction versus the record keeping that they have to put into place to get some amount of a deduction. And because my position is going to be, if you don't keep the records and tell me how to do it, it's all non-deductible at this point.
Non-deductible, and that's why I think talking to the clients earlier in the year just makes it that much easier. They get to June, July, August, and they're like, "Well, heck, I haven't done it all year. Why start now? I'll just start in, 27 or something."
Yeah.
So I do think it's a good talking point.
Yeah. Well, it's something we need to talk because I don't know how much this is. For some businesses, this might be a lot of money. I don't know.
Yeah, yeah. All right, Roger. Well, we're getting to the top of the hour. There was just a couple of things I wanted to remind folks of. This year, the IRS is phasing out their paper checks. I'm sure whatever software you're using to prepare tax returns, you're getting reminders or diagnostics or something that's telling you make sure you enter bank account information. This was something that came out in September of 25. It did get, I think it got a little bit of publicity. I don't know if from the taxpayer sense, I'm not sure they are aware
No, I don't think so.
that they're not going to get their refund if they don't put in a bank account unless they meet some of these like hardship exceptions. But what I do want to remind everybody of, if you file a tax return for someone and you don't put a bank account information, let's say your software lets it go through, the IRS is going to send a notice and it's going to tell the taxpayer, hey, we can't send you your money until you log into your online web account and enter your banking information and then or indicate that you have a hardship, and we'll go check your account in the next 2 to 4 weeks, and then we'll process your refund however you indicate, whether you put the banking information or meet an exception. So it's just going to be delayed processing. So I encourage you there, if you have a client that's not a banking client, go get a bank account or use IRS Direct Pay. There's some EFTPS that you can be used. I know that they've already put out some like debit credit card type things that you can get. So encourage your clients to pick an avenue where the return gets processed when you e-file it, and not go back and forth with, oh, get the notice, log in here, enter the information, hopefully they got it, now you're waiting weeks just to get the refunds. Just avoid all of that and handle it before you e-file the tax return.
Yeah, and go ahead and make it a routine because to Annie's
Yeah.
point, you're gonna delay the refund significantly if you ask them to send you a paper check because they're not going to. So we're going to have to jump through hoops. We need to make sure we have bank accounts on all of our clients, even those that owe, because you can still send a paper check to the IRS
Currently.
currently, but we don't know how long that will even last.
Yeah.
So you might as well go ahead and get ahead of the game, get a bank account for everyone each year, verify that bank account's still relevant and active and correct. And it'll get your refunds to you quicker without the hassles, and they still can pay on April the 15th.
Oh
And
yeah.
I mean, it
Yeah.
just doesn't it just we just gotta break some habits of I like to write them. The funny one is I like to write them a check. I don't like to give them my bank account information. Well, what do you think's on the check you mail them? So,
Yeah.
you know,
Yeah.
I mean, that sounds like, yeah, I don't want them to have my bank account information. Well, they got it.
Right. Yeah.
Trust me, they got it. So again, spend a little time up front making sure this year, if you don't have a bank account for your tax clients, get one, whether they owe or not. Put it in the system; it'll stay there
Mhm.
because sooner or later, it's going to save you a whole lot more time. That the fact that you got it than if you ignored it and have to chase it down in real time.
For sure, and I understand that that's kind of probably should have put it on your organizer before they went out, and most of your organizers are now out, but it takes a simple phone call to get that information, and it'll save you a lot of headache at the
Yeah,
same time.
yeah. Again, it's just the fact. Right now, uh, and I understand why they don't want to send out paper checks, and there's fraud, there's time, there's cost, there's all kinds of things.
Mhm.
There are exceptions, but again, that's not gonna speed up your refund trying to qualify for an exception.
No, no. Well, all right, Roger. That was all the stuff I had for today.
Well, that was again, it wasn't new topics, but hopefully it was a new twist that
Yeah.
you guys, enjoyed and some real world, and we're gonna continue to monitor how tax season goes and,
Mhm.
report what we're seeing and hearing, as we move forward. Um, like I said, I would say so far, I'm cautiously optimistic about how things are going, which could change tomorrow, you know?
Course. Well, I hope that your tax season, everyone's tax season is going well. You're taking time for yourself and talking slowly with your clients and use patience because they're going to have a lot of questions this year with a lot of new things. You probably have extra phone calls and emails to respond to, but hopefully everything is off to a good start for you. And we will continue to come back with additional topics, updates. So keep us in mind as you navigate through tax season. Take a listen, and that's all I have today, Roger.
Well, Annie, thank you as always, for joining me and putting a lot of effort into preparing this stuff for this, and thanks to all of you for listening. Uh, we're very, appreciative of all of you that have listened. We got to see some numbers on how many people have listened to our podcast in 2025, and we can't thank you enough. We hope that you will continue to listen and tell your friends if you're have people who don't know about this podcast and send us some suggestions if there's topics you'd
Oh
like us
yeah.
to cover. We would love to. We're doing this hopefully to be relevant to you, not to us. So if you got something you want us to talk about, let us know and we'll do the best we can. And continued success during this tax season. Good luck to everyone. Hope you enjoyed today's podcast. We'll be back in a couple of weeks with another one. Again, Annie, thank you for all you do. Thank you for listening. Have a good day, and we'll be back soon with another Federal Updates podcast.